Tax-free income is a crucial aspect of personal finance that can significantly reduce your tax liability. Most income is taxable, but the UK government allows some income to be tax-free through a variety of tax reliefs and tax-free allowances. Tax reliefs and allowances provide individuals with opportunities to lower their taxable income and potentially reduce their overall tax bill. Understanding how your income is taxed and how to utilise these tax-free options is essential for effective financial planning. Let's explore some of the most common and valuable tax-free allowances available to UK residents. The basic personal allowance is the cornerstone of tax-free income. The tax-free allowance is normally applied automatically against your income and can change in value depending on certain benefits and allowances. This allowance applies to both employed and self-employed individuals and means your earnings up to the personal allowance threshold is free from tax. Married couples or those in civil partnerships can benefit from the marriage allowance. This allows a lower earning partner to transfer 10% of their personal allowance to their basic rate taxpayer spouse, effectively reducing the higher earner's tax liability. Savings interest also enjoys tax-free status up to certain limits with the personal savings allowance. The personal savings allowance covers income from bank and building society accounts, for example. Only basic rate and higher rate taxpayers can currently use the personal savings allowance. There's also a starting rate for savings for lower earners that can provide up to an additional £5,000 tax-free, depending on your overall income. Self-employed individuals and those with rental properties can take advantage of specific allowances. The trading allowance permits up to £1,000 of tax-free income from self-employment, while the property income allowance offers the same amount for rental income. For those renting out a furnished room in their main home, the Rent-a-Room scheme allows up to £7,500 of tax-free rental income annually. Shareholders and limited company directors can benefit from the dividend allowance. This means you won't pay income tax on dividend earnings within this allowance. In addition to these allowances, there are various tax reliefs available for both employed and self-employed taxpayers. Employed individuals can claim relief on certain job-related expenses, such as uniform cleaning, mileage, and professional fees. Self-employed people can reduce their taxable income by claiming relief on business-related costs. Pension contributions also offer significant tax benefits. The government provides tax relief on private pension contributions. Making pension contributions lowers your taxable income, meaning you will pay less tax. The amount of tax relief given and how it is claimed is based on the rate of tax you pay and the type of pension scheme you pay into. Some types of income are inherently tax-free. Many benefits, including universal credit, pension credit and child benefit, are not taxed. Premium bonds from National Savings and Investments offer tax-free prizes, and individual savings accounts allow you to earn tax-free interest on savings up to the annual ISA allowance. Maximising these tax-free income opportunities is a smart financial strategy. By understanding and utilising the available allowances and reliefs, you can potentially save a significant amount of money over time. However, it's important to stay informed about any changes to these rules, as the government may adjust them periodically. Whether you're employed or self-employed, taking advantage of tax-free income options is an essential part of managing your finances effectively. By doing so, you can keep more of your hard-earned money and improve your overall financial well-being. You can find out more about tax rebates and tax calculators at www.taxrebateservices.co.uk. The content used in this video is intended for educational and informational purposes only and does not constitute advice. We recommend that you do your own research on each subject and take advice from HMRC or a professional tax advisor.